thank you, Steve, for joining us. This is great because obviously we do a Q&A every Tuesday, but the question I'm getting all the time right now is about mortgages and lending and what's going on. And obviously with interest rate changes and the deferral programs out there and all of the other things, there's so much sort of to unpack. So maybe we can talk a little bit about, if you don't mind, what interest rates are doing right now.
Oh boy, that's a good question. Of course, we've seen and heard the Bank of Canada cut rates, but it's not really translating into lower mortgage rates. So I'll explain that. It requires a bit of explanation. The Bank of Canada rate directly affects the prime rate. The prime rate is what the variable rate mortgages are based off of. So typically, let's say the prime rate is 3%, you'll see a variable rate, prime less, 0.5%. That's been fairly typical, an average over the last 20 years or so. Mm-hmm. As prime goes down, you get a lower mortgage rate. So prime rate has come down 1.5%. This month. That's unheard of. These are emergency rate cuts because of the COVID-19. And so prime rate right now, by the way, is 0.45%. So that's great, it's low. Here's the problem. Fixed rates are going up. Fixed rates are directly priced from the 5-year Government of Canada bond. That's dropped like a rock. That's actually sitting at about 0.7, 0.8%, somewhere in that ballpark. And normally you would see fixed rates be about 1.5, maybe 2% at most above that. So we should be seeing rates of, 2.25, 2.5%, somewhere in that ballpark. And we did, when this virus first started, or at least was impacting Canada, everything dropped. But that lasted only for about a week.
Right.
After you probably saw that. And after that, rates have been going up. We're over 3% now for most products on fixed rate mortgages. Now, the why. What's happened is the investors are looking for a premium from the banks on their mortgage products. Because the stock price have come down 30, 35%, they want a higher profit, a bigger spread. And unfortunately, consumers are sort of footing the bill. I mean, that's the best way to explain it. I know it's a bit confusing, and I get asked that question every day. I don't know how to answer it in a shorter or condensed format.
Yeah, definitely nothing we've seen before, at least that I can recall.
No, I mean, we saw something like this in 2008-9 after the U.S. subprime mortgage crisis, and again in the SARS 2003, but not to this extent. No, this is new territory.
So does it mean that people are, I guess I have a couple of questions about that. Does it mean that people are having a harder time getting a mortgage right now, or easier? And then part two of that is, if they are able to get a mortgage, should they be considering variable or fixed?
Yeah, good question. I love variable rate because it's usually the lowest price product. It's hard to take it today. Current pricing on variable rates is prime minus 0.05, maybe 0.1. There's one lender that's still hanging on. I was kind of taking a look to see if they sent any notifications this morning. I haven't seen anything. They are at prime minus 0.3. So prime is 2.45%, minus 0.3. You'd be at 2.15%. That's great. Should you take that versus a fix? Well, fixed now is 3 or over 3%. So the spread is there, theoretically, to take variable rate. I would take that right now because I think bank prime is going to be low for some time to come. We're not going to get out of the economic emergency for, a couple of years, I would say. We're going to get out of this coronavirus thing. I mean, hopefully in the next month or two. I don't know, but it's not. No one's expecting it to last, 6 months
Forever.
or a year. Right?
Mhm.
No, please
Mhm.
no.
Mhm.
So I'm liking variable rate. It depends on the situation, what the purpose is for, people's budgets. I think a lot of people are nervous right now, and right, right. They're right in that thinking. I mean, their jobs are in jeopardy and laid off. But I think what I'm also seeing though is there is hope. The government has stepped up and is offering all sorts of guarantees for income. The banks have jumped on board with deferral. I know you're going to ask me that question a little bit later on. Um, so what should they take? I don't know. It depends on the
Mhm.
individual, I
On the
suppose.
situation.
Yeah.
Yeah. Now, with a lot of job losses happening and the uncertainty in the market and all of that kind of stuff, stock market, I mean, are you finding that people are they still trying to get mortgages right now? And if so, is it a problem?
Yeah, very good question. So that's the big question. I'm getting laid off. How can I get a mortgage, right? Or how do I buy a house? Or how do I refinance or renew? Interestingly enough, we've just seen two circulars from a couple of the bigger lenders, the banks, saying, and this was on Friday, by the way, that they are going to look at people that have been laid off. The question they want to know is this permanent? Is it temporary? So if it's, temporary because of what's happened, they will do the mortgage still. So
Okay.
they're, again, that's great news, by the way. And this
Mhm.
is, we've never seen this. I mean, if you're
Right.
laid off and you go apply for a mortgage, you're not going to get it.
Right.
I mean,
Right.
that's just standard. But today, everything's changed. They're saying, wait a minute, tell me about your layoff. Is it permanent? As long as your job letter says that you're going to be able to come back or expected to come back to work, um, you'll be fine. But it's a case by case basis. But it's
Right.
still lots of hope there.
What about those people that are kind of caught in the middle? So they've purchased something, they've been pre-approved. Now, before it closes, they lose their job, or all the money that they were planning to put down for a down payment, they've lost substantial amounts in the stock market. What's going to happen to them?
Well, again, the lenders are working with them. They're not just turning their backs and saying, see you later, get lost. They're saying, okay, is this a permanent type of job loss or is it temporary? So if it's temporary, again, you're probably going to be okay. It's a case by case basis. They're making assessments on each individual situation.
Okay. It's just, I think, such a scare for a lot of realtors in my position, but also my buyers, who are concerned about the properties not closing for whatever reason, like small lenders not being able to fund it on time, or not having the money, or any other issue that could go awry between the time the property has finalized, the purchase is finalized, to the time it actually closes. So do you see any issue with properties not closing that are supposed to close?
Not yet. Haven't seen that yet. I think nobody wants to be in the headlines to
Yeah.
say, "Well, we didn't close," and the media is waiting for that. They love to publish negative news. You and I talk about that often.
Hmm.
I wish they would stop making it all negative. It's not all negative, but
Yeah.
no, I haven't seen that yet. It's probably going to happen, but I haven't even heard of a case yet.
Okay. I had one personal situation this week where the lender said they did not have the staff to close. This was the buyer of the property. Their lender wasn't able to get enough staff together or something, and have pushed the closing off for a month. So that was the only instance I've kind of heard of, and it was Marianne on my team with something that she had experienced. So I guess that's the only instance I've seen so far. I don't know. I'm hoping that won't come about more often as time goes along, but so nothing like that. You have, other than that story, you haven't seen anything bizarre like that.
No, the only thing I saw was the adjustment period for all the banking staff or financial institutions to shift from an office environment to a work at home. Um, we've heard, again, I got an update on Friday that they're at about 80% capacity. So that's great.
Good.
They've made a transition. Technology is far better now than it's ever been. So, grab a laptop and a cell phone and, you're good to go.
Good to go.
So I did see a week ago when it was very chaotic. If you had a condition on finance in your offer, I saw lenders not being able to meet that. They did not. They all asked for extensions, and sometimes that wasn't possible. So I saw that happening, but yeah, closings delayed. I'm not surprised. Thank goodness I haven't experienced any, but I'm sure there's still going to be a few going on out there. But again, I think as time goes on, that should be less of a problem.
Okay, good. Now more than ever, I would assume you would recommend that if anyone's putting an offer in on a property, that they really need to be careful about their financing. Obviously, we tell people whenever they can to put a financing condition in the offer. Obviously, in the heated market, especially in Toronto, it's been difficult to do. So now I'm assuming more than ever, we should make sure that any buyers have that conditional offer in their contracts. Or
Yeah.
is it kind of the same as it always was?
Yeah, good point. Definitely should have that in your offer, and you should have had that before in your offer. I mean, there are situations where, hey, you're putting 40% down on a purchase. You don't care if the appraisal comes in a little bit less. Your income's already been approved. You qualify, great credit. At that point, it becomes a business decision. Should you go in without a condition of finance clause? You probably could. There are still some things that can go wrong, but it's less likely at that point versus someone who's really tight, maybe putting 20% down. They can't afford for the house to appraise for less. That would be very costly, or even individuals are less than 20% down. I'd be careful. But I think, as you said, nothing's really changed. You should be putting that condition of finance clause in if possible, even in a competitive market, yes.
Yeah, okay. Now let's talk about this deferral program. I think there's a lot of information out there, including an article you and I discussed yesterday about if you do defer your mortgage, that may affect your credit rating, according to the Toronto Star. So there's a number of different questions I have about this deferral program, but maybe if you could just give us a bit of an overview on what it looks like. What exactly does that mean? Is it going to cost us more money to do that? Does it depend on the bank, your situation, all that kind of stuff?
Sure. So the deferral is not a bad thing, first of all. It's something that was, I guess, devised by the banks and the government, knowing that everybody was going to be not working or working from home. A big percentage of the population is not working right now. And if you're not working, usually you don't get paid. So what do? You have a mortgage payment coming up next month, which is, I guess, tomorrow. I think, tomorrow. And no money or little money, or not expecting money. There's nothing wrong with deferring the payment. All you have to do is call up your financial institution, ask them to defer it. You can defer 1, 2, more. And it simply means that you're taking that monthly payment. Let's say you pay $2,000 a month, and you're putting it aside. You're going to pay it at a later date. No one is even talking about the repayment of that at this point. It's too early. All they're doing is they're saying, do you want to defer it? Great. Let's push it to the side. We'll get to that later. And later means probably in about a year's time or so. discussion will need to be had with the financial institution, with your mortgage lender, and figure out how you're going to repay that.
Okay. So are different lenders giving different rules? Like how does that work? Does it depend on the lender itself? And the other question I have was about interest. I mean, you have to still pay your interest on your mortgage during that time, don't you?
Right. Yes. Each lender is different, but generally speaking, their programs are very similar, which means you call up, you ask for a deferral of 1 or 2 payments or 3. I've seen some people ask for 6 straight months of deferred payments, and some financial institutions are doing that.
Mhm.
Quite frankly, I mean, I don't know why you'd want to do that all, right off the bat. I would suggest deferring 2 or 3,
Mhm.
and then, calling up again in 3 months or so and asking to defer those payments. Um, as far as the interest rate and cost goes, this is where the press has been putting a lot of negative publicity about this. There's no hidden cost or extra cost to do this. There's no fee to do this. You're going to pay interest at whatever rate your mortgage is at on the payment. So the example that I've been using is, let's say you have a 3% interest rate, you have a $2,000 a month payment. $2,000 works out to be about $60 a year. That's what your cost is, your interest cost on deferring that payment. So yeah, if I'm not working, $60, so what? I mean, it's
Right.
such a small cost, and it's not an inflated cost. It's just whatever your interest rate is. That's how it works. I would definitely recommend it. There's nothing wrong with it. Um, it yeah.
And is there any chance at all that the lender would say, no, you can't have it deferred?
Yeah, there is a chance. I think if you call up, I mean, I had some clients call me up the other day, and they both had government jobs, and nothing changed with their incomes. And I wasn't sure why they were inquiring about deferring their payments, but I told them, no, this isn't for you. This
Right.
program is it's an emergency situation. It's for people that have had a change in their income. It's to help them. So if your income hasn't changed, please don't call up.
Yeah.
Uh, the banks are overwhelmed right now with phone calls. So
Mhm.
long wait and delay time. It's just for people that have had a change in their income to help them out.
And do you need to prove that you've had a change in your income, or is it just sort of they
No,
take your word for it?
it's
Okay.
just a questionnaire. They
Yeah.
just ask some questions. There's no time to do any thorough sort of checks on that. And again, it's not like the banks are not, charging for this. They are charging, but they're charging the right amount. They're charging the interest that should be charged.
Okay. And so, from what I understand, for most lenders, you can do that either online or by giving them a call. Is that your understanding as well?
Yes, yes. So they've all set up phone numbers, and now they've set up email addresses and websites to go to, because they're overwhelmed with the calls. Like I heard
Okay.
somebody had an 8-hour wait the other day. I know,
Yeah.
um, because it's so new, right? Everybody's been thrown
Yeah.
into it. So just, I would say, be patient. You will get through, and they will honor it. Just, yeah, just, I don't know, put a
Yeah.
Netflix on or something while you're on hold.
Yeah, I had the same, just as an aside, I had to call for an e-transfer that didn't go through, and I had no choice but to call them, and I was on hold for about 2 hours. This was last week.
Oh, wow.
So yeah, and wasn't even about the mortgage, so I can only imagine. But
Right. It's sort of
yeah.
all hands on deck, and they've pulled
Yes.
people from everywhere.
Yeah.
So it's affecting all the services at the banks.
Right. Now, is there anything else that you think that people should know in terms of what's happening with mortgages right now that maybe we're not hearing in the news, or anything of importance that you think is worth noting?
Yeah, I do. Just on that 6-month deferral, and I sent you that article yesterday, Janelle, from one of our big media newspapers or sources. saying that this could affect your credit score, credit rating. And I'm talking about deferring the mortgages, the mortgage payments. And so I want to tell everybody that's not the case. That is possible if a mistake is made. The mistake being that if the bank doesn't, in their own internal system, doesn't identify that you've deferred the payment and are not treating it as though you've bounced a payment like an NSF check,
Right.
you're fine. Will a mistake happen? Sure, with hundreds of thousands of these inquiries taking place and adjustments being done, yeah, mistakes going to happen. Mistakes happen every day.
Yeah.
But for the media to come out and say this is going to damage your credit score, credit rating, I was quite disgusted actually to see that came out. That's not true, and it's fear mongering. And so that's one thing I wanted to say. There's nothing wrong with it.
Yeah.
I mean, the other thing to tell you is that, and you're seeing it, Jenelle, because this is your domain, but I really haven't seen real estate prices tank or go down or nosedive. I've seen there's more supply on hand, more homes for sale, but I haven't seen, this crash or bubble, real estate bubble we've talked about. I don't think that's going to happen. I think as we come out of this, and we will come out of it, I think we're going to be fine. I think the real estate market will be strong, by the way. And again, sorry, this is your domain, but it's kind of what I'm seeing from the forecast from the financial institution. That's why I'm making a comment on that. I try and follow that. And I don't see a big panic, which is actually, I'm a little surprised. I thought we would have seen, or I would have seen forecasts for that, but I haven't. So hopefully they're right, and the real estate market will be resilient and continue on. I think that's going to happen. So I just wanted to maybe pass that message along.
Yeah, it's good people hear that from someone other than me. But I agree with you. I don't know what right now. What I'm seeing is the prices are still pretty stable. There's been a few pockets, I would say, where we haven't seen the multiple offers we would normally see, but there's still some that have them. East end of the city, for example, is really hot, and there was someone in my brokerage that had 9 offers on a property in Pickering or something the other day. So there's still, which is strange to me, but we'll see how the next few weeks or months shake out. But there's enough of a demand out there that it'll be all pent up by the time we get back to normal. And yeah, I think we're okay. I do have a lot of people right now that are thinking about panic selling. I mean, what's going to happen to the market, and is it going to crash and we get rid of our place now, that kind of thing. So I mean, I'm pretty much said to everybody, let's just see what happens, right? It's just too early to make any rash decisions, I think, at this point. Good. All right. So I will make sure that your contact information is in our posts, so that if anyone wants to reach out and talk to you about mortgages, then they know where to go. And I thank you so much for spending the time today. I really appreciate it. Maybe we can get you back doing this again in a couple of weeks and give us another update.
Yeah, happy to help, Jenelle. And there's a lot of programs being rolled out still. The income supplements, things like this. So stay tuned, I guess, is my message. There's hope, there's assistance. Stay positive. We will get through this. And I mean, I guess that's my message, is just don't watch the news too much, or the media.
Yeah.
Try not to. But I'm happy to help in any way I can and answer any questions. So thanks for having me, and I hope this helps.
Yeah, for sure. Absolutely. Thank you so much.